let's check in on Infosys Technologies. That was the big story on Friday, and that will remain the big story for us today as well. The top management now joins us, SD Shubulal, Chief Executive Officer of the company, and the CFO, V. Bala. Gentlemen, morning. Thank you for joining us. Bala, I know you've answered this question before, and you answered this question in the conference call. Why has Infosys given such a poor guidance?
I think you should understand the economic volatility is too high, and most of our revenues comes from US and Europe. In the March quarter, we have seen a confluence of 3 or 4 things. One, some of the large contracts which are to be signed, those decisions got delayed. We have seen some ramp downs in some of the financial services clients. Wherever we anticipated that the project will start and the ramp ups will happen, those decisions got delayed. And even we have seen some changes in the CXO level in some of our customers, and that has impacted the decision-making process. So when you have a confluence of all those 4, which impacted our revenue growth in March, we naturally want to be cautious for next year. Today the challenge is not about budgets, because most of the clients have finalized the budgets, and the budgets are either flat or slightly down, but the ability to focus the spending has come down. So there will be volatility in spending depending on how the macroeconomic environment evolves. That is why we are very cautious.
Shibu, I want to get you in on this. There was a lot of debate in the analyst community whether you will guide this time or not. Did you internally have a similar debate on this? Because, some sections were in favor of rather not giving a guidance than saying, the company will grow 8 to 10% below NASSCOM estimates of 11 to 14%.
So we have always believed in giving guidance. We always believe that there should be symmetry of information between inside and outside, and guidance is the way to do it. And our guidance is a statement of fact, as we see it at that point in time. Based on that, this year also we have given a guidance. Now, we discuss and debate various things during the course of the year, during the course of the quarter. That is normal. Of course, guidance was also a part of it, but we have given a guidance in the past, and we have given a guidance now also.
But you did see a ramp down in Q4. Q1 also you're expecting marginal growth of 1%. Are you expecting momentum pick up in later quarters? To meet your 8 to 10% guidance, you will need to grow at 3.5 to 4% for the rest of the 3 quarters as well. Do you expect momentum to pick up?
So Q4 was a difficult quarter for us. It was a challenging quarter. We had seen convergence of multiple events. Multiple events came together at the end of the quarter, especially in March, to create the situation we had in Q4. We have seen contractual delays. We have seen delays in ramp-ups. We have seen ramp downs, especially in financial services and in US during Q4. Most of it happened towards the end of the quarter and in the month of March. So that's how we came to the situation which was in Q4. It was a difficult situation, as I said. But at the same time, I think it is important to place on record the good things during the year. We have added 52 new clients in Q4, many of them in the Fortune 500. We had good wins in Q4. We had 5 large deals closed in Q4. Out of that, 3 of them more than $100 million. We have 7 business transformational deals closed in Q4. We did a billing of $25 million towards platform in the year of FY12, but we have exited the year with $350 million in booked business in TCV. So there are many good things which have happened during the year. Now, where we are, that is important. We have just come out of Q4, 10 days into the new quarter. Our guidance is a statement of fact, as we have done it in the past. In the beginning of the quarter, we have visibility for about 95% of our business for the quarter, and in the beginning of the year, 65% for the year. So we have given a guidance based on the visibility which we have as a statement of fact. It is true, if we do only 1% in Q1, we need to do about 3.5 to 4% during the next 3 quarters. We have done a complete analysis of our client base. Based on all the information we have at this point in time, we believe that our guidance is the right one to do.
Bala, at a time when US economy has recovered, how come that is not translating into some kind of visibility for Infosys? And are you of the view that if US economy indeed improves in coming quarters, that could change spending, commitment, and then outlook from some of your clients?
No, I think it's going to be volatile because if you look at all the recent macroeconomic data emerging from US, there are concerns about growth. The employment creation has not been up to the expectation, and Europe crisis is still lingering around. So in this kind of environment, customer ability to come and spend on IT with a volatile environment also comes down. I've been saying this, if you look at all the S&P 500 companies, earlier 1/5 of the companies don't give guidance for the full year. Now it has increased to 1/3. This means ability of companies to predict for next 12 months has come down drastically, and that also impacts the spending patterns of the client, because if you are looking at an uncertain environment, our ability to come and spend also comes down. That is what we are seeing. But hopefully, if the macroeconomic data improves and clients get more confidence, probably they will come and spend more and we will look good.
Bala, in your conference call, you said that visibility for the June quarter is 95%, while for FY13 it's 65% as per your guidance. Could there be a possibility of growth further deteriorating as you're working on the assumptions?
No, we had been saying this. Our guidance is a statement of fact. For example, last year, in the beginning, we gave a guidance of 18 to 20% growth. We revised to 17 to 19 in the second quarter because the currency is moved. Then we brought it down to 16.3 based on the change in environment. Finally, we delivered 15.8. So you are living in a very volatile world. Our guidance is a statement of fact. It can be positive and negative depending on how the world environment is going to move. So we had given a guidance based on what we know at this point of time.
Shubhu, this one is coming your way. BFSI revenue declined by 5% for Infosys for the quarter gone by. Do you expect this vertical to really be the most important vertical, but the most challenging vertical as well?
I think we will see volatility in the BFSI segment going forward also. See, if you look at the BFSI segment, the profits of the BFSI segment, many of the clients have gone up. But at the same time, they are not seeing growth in their revenue. It is not business-led profit creation. Historically, the technology spend in the BFSI segment is related to the profit. The more profits they get, the more spending they do in the technology spend. That linkage, at least right now, is broken. I'm sorry. So that means that, that linkage is right now broken. We are also seeing a zero-based budgeting phenomena in the FSI segment, and we are also seeing decisions being made on a month-to-month basis. We have seen a few leadership changes in the FSI segment in the last quarter itself. So we expect the BFSI segment to be a little bit more volatile than the other parts of the business.
Shubhu, you mentioned that clients have shifted to month-to-month budgeting now. Does that make it difficult to plan hiring? 35,000 employee addition is in line with 8 to 10% growth. In case there is any change in this number, would you need to revisit your hiring plans in that case?
So the month-to-month remark was more specific to the FSI segment that I just want to place on record. See, that is a point I made. It is a bold thing to do, a guidance in such a volatile situation, right? It is a new normal. It is more volatile than the past. But we have always believed in giving the guidance. As a statement of fact, we have done it. Our hiring plans are linked to our growth projections. This year, our plan is to hire 35,000 people. Out of that, 13,000 people are in the BPO, which means that it is a net addition of 6,000 people in the Infosys Limited. That we believe is required for our growth projections for the year.
While no salary hike was given this year, you had an additional tailwind from the currency equation because rupee depreciated by about 5.8% for FY12. So if both the tailwinds are being played out, why are you factoring in a margin decline of about 50 basis points to about 100 basis points for FY13?
If you look at, we exited the year with a 70% utilization, excluding trainees. That is one of the lowest utilization we have seen for many quarters in the past. So you have a lower utilization that is going to impact margins, and also we are hiring 35,000 people more. See, our comfort zone on utilization is somewhere between 76 to 80. That means for a 6% growth, we already have people. We are hiring 35,000 more to make sure that we train our employees and keep them ready if there is a incremental growth. And on our employee side, we always taken care of them. Even in 2008, the worst crisis we ever seen, we honored all the offers in the campus. Now the other competitors are done. Most of them have deferred the offers, or some of them cancelled the offers. We are the only company which honored all the offers we gave in the campus. Even 2 years back, we distributed the shares with the trust to all the employees, free of cost. So I think we always take care of employee interests, and this is an unusual year. We are starting with a very volatile environment. Our visibility on growth is very limited. To that extent, we have to balance the interests of stakeholders. That's why we said we are not looking at a wage hike at this point of time. Over the year, when we have better visibility on the numbers, when we have better hold on the growth, probably we'll relook at the wage hike.
Bala, you mentioned visas as well earlier. You know, the rate of rejection has been high. Do you see any kind of problems now getting in with visas in particular?
No, I think there is a political reality, there is an economic reality. Because US is an election year, there is a lot of noise around the visa issue, and that is to some extent having an impact on the visa rejections. But if you look at the data, most of the rejections are in L1 category. We use very less of L1. Most of the employees go on H1. To that extent, I don't think it's a very big issue for Infosys.
Right. So, Shibulal, no salary hikes at the moment. Do you plan to revisit in coming quarters?
See, I think our employees do understand that we have been through a tough time. It is a challenging environment. It is a new normal. We are clearly talking about it. We are entering a quarter where we have given a guidance of 0 to 1%. So, I see, when you look at our employee base and the model in which we are trying to build it, it is not based on compensation alone. Our belief is that our employees look for 2 or 3 things in their career. Number one is the ability to build capabilities. So if you look at all the investments we are making in our employees, the 6-month foundation program, the management development program, the certification program, the leadership institute, it is all about building capabilities for our employees. We are also, if you look at the new model, there are some extremely challenging work which our employees will do. We are doing more and more transformation work. We are developing products and platforms. That means it is very interesting for our employees to do these kinds of work. So that is about building capability. Second one, if you look at the transformation which we did during the last 8 or 9 months, the new structure which we have put in place, it is all about creating autonomy. Employees look for empowerment, they look for autonomy, they look for decision-making capability, they look for, purposefully or meaningfully contributing towards the organization. That is what we are doing. That is the second piece. Of course, the third part is about purpose and compensation. They clearly understand the purpose of this organization, and they clearly understand the purpose of Infosys. And I think the fourth piece is the compensation. So if you look at the holistic approach which we are taking, building capabilities, allowing them to take decisions, creating autonomy, having a purpose, and having good compensation structure. That is the framework which we are building. We clearly believe that our employees understand it. We are going through a difficult time. They will understand.
Bala, what has mostly hurt Infosys' stock is the communication from you guys to the analyst community, which has been great in the last decade and has basically somewhat come under cloud now. There was the mid-quarter warning by you. You missed your fourth quarter guidance. Now you say you will grow at 8 to 10%, while the industry body, that is NASSCOM, is saying that the industry is going to go at 11 to 14%. There is somewhat of this dilemma that analysts are now facing as to, why should Infy get a premium now versus its peers? How would you defend yourself?
No, that is a dilemma of a leadership in the sector, because NASSCOM has given a guidance, but they also given a wide range of guidance of 11 to 14%, and they also said they will revisit the number somewhere in the middle of the year. So today, your ability to forecast has come down. That's what we keep saying. and that is true for all companies. So NASSCOM has given a number, and we are given a number. Only time will say where it's going to end. But at the end of the day, we have a set of clients. We have some visibility into their budgets. We have conversation with the clients. They convey to us what the spending pattern is. Based on that, we give a guidance. And our guidance, to some extent, is slightly conservative because we have come to a tough year, tough quarter, and entering a new year with too much of volatility. So we had given guidance based on statement of fact at this point of time. And tomorrow it could change. If the things becomes positive, probably we'll do much better. See, this is one company which has delivered on this number for many years. We are going through a tough time, but doesn't mean that we are hitting a wall, right? We are changing our strategy. We are looking at more nonlinear growth. We are looking at high value-added stuff because the industry has got a challenge. This industry has got a challenge of scalability, challenge of commoditization. We don't want to be a commodity player. Even last year, our pricing went up by 4.7%. None of the players in the industry has seen that kind of a growth in pricing. So we always focus on high quality growth. To some extent, it may have an impact on short term. So be it. We are building a company for long term, and the investors understand that. Long term investors understand that. That is very important for us.
Bala, does it not somewhere though irk you that analysts have slashed Infosys price targets in the near term by as much as 150 rupees per share, and the way the stock really cracked on Friday after the numbers?
See, the market has a own way of seeing things. Some are more short-term focused, some are more long-term focused. It depends on who says what. But at the end of the day, you need to build a company for long-term. You need to build a company which is high quality, high revenue growth, high revenue productivity, best margin in the industry. We never diluted those criteria, and we've still grown. Even last year, we have grown at 15.8%. It's not a small growth. So I think some investors are more short-term focused, but we are building a long-term company, and we want to build a high-quality company. That message is very clear from us. I think long-term investors understand that.
Shibu, jump in on that one now. There has been a debate, a lot of debate and rethinking on your strategy that you need to, or you want to pursue high quality growth, higher margin business in the near term. But even though you are pursuing that strategy, for the year FY13, according to your guidance, you will be growing below the industry average. So it appears to a lot of analysts and some fund managers that this strategy is just not working for you.
See, our aspiration is always to have superior financial performance. And we define it clearly. We say that superior financial performance means that we will have above industry average growth and superior margins, right? The proof is in the pudding, right? Even in a difficult year, when there has been so much of volatility in the environment, our revenue productivity has gone up by 4.7%, right? So we have been able to execute our aspiration at the previous year. Our aspiration continued to be to have superior quality growth, to have superior financial performance, which means we aspire to grow above the industry average and to have superior margins.
Bala, one question away from the numbers. There are reports that you're looking at an acquisition of $500 million in Europe. Is that true? And if so, by when are you likely to conclude it?
Well, there's a rumor. Rumor keeps coming up. Probably earlier they used to talk about 100 million. They come to 500 million. They're increasing our aspiration. See, we always keep looking at targets. Whenever we find a good strategic target, we'll definitely pursue it. We have enough resources in our hand. We have close to $4 billion of cash. We clearly articulate our strategy. We want to grow big in platform, product, solution kind of business. That is where our acquisitions are going to be more focused on. We are pursuing some companies. We don't know when it's going to happen. But definitely, if we find any strategic fit, irrespective of the size, we'll definitely look at it.
Is it going to be specifically in Europe?
No, it doesn't matter whether US or Europe. As long as it fits our strategic requirement, we'll definitely look at it.
Bala, but is there need to now seriously pursue some big inorganic opportunity?
No, there is always a need, because what we are trying to do, we are trying to use acquisition to fill in some of the gaps we have. We're not looking at acquisition to grow the existing business, right? So our acquisition is more focused on some of the geographies where we want to become big, some of the verticals like healthcare, life science, where we want to become big, or in the product platform solution space where we want to get 1/3 of our revenues in the near to long term. So our acquisition more to fill in the gaps we have in the system, not to incrementally commoditize and buy some captives and grow. That is not our strategy.
Well, the Infosys I know and the Infosys I have tracked from last 15 years is a company which has always surprised everyone on the upside. FY12, unfortunately, you disappointed everyone. For FY13, will you surprise me, markets, and your shareholders?
I hope so. That is what we are striving for. As I said earlier, we had given a guidance based on what we have seen in the market. If the environment turns better, we'll look better. But at the end of the day, our strategy is focused on medium to long term. How to get away from commoditized business, how to grow more value-added business, how to build transaction-based business. So you address both the issues of commoditization and scalability and build a company for long term. That is what you're focusing on.